Hey there, everyone. How are you doing today? Michael Zuber, author of One Rental at a Time. And you know what? I just want to have a quick conversation with you. I want to propose an idea, kind of a scary idea, but it's something I think we all need to think about. I don't know about you, but I feel kind of uneasy about the stock market. It really feels like there's a lot of kind of competing forces in the stock market right now, and we could be one event away from a significant drop. So what I wanted to ask today is, what would happen if the stock market fell 30%? Maybe it's tech heavy, Nasdaq, maybe it's the S&P that includes Tesla, maybe it's the Dow, maybe it's all of them. But what would happen to real estate investing if the stock market fell 30% in a 14, 21-day period, right? Maybe it falls 4 or 5% a couple of days, but the trend line is down. And we look up and the stock market's 30% off its peak of today. What would that mean? And again, to me, it just feels like the stock market is fragile, right? We got hedge funds blowing up, both the short and long. We've got the 10-year rising. We've got the great rotation. We have the great reopening. There's just a lot of stuff going on, not to mention the federal government looking to spend an inordinate amount of money and raise taxes, and just all of these forces going on. So what would happen to, first off, the retail investor, right? Because when I think real estate investing, I think real estate, it all comes back to the fact that we're all consumers, right? If you're going to buy a home either to live in or rent or flip or wholesale or whatever that is, you're still a consumer. So my first thinking is, oh my God, if the stock market went on a 30-day collapse of 30%, what happens to the retail investor? And I say this because it happened to me, right? Back in the 2000s, you know my story. I was up a lot and then I wasn't. And I remember that period because you went really from, having conversations with friends about what stocks and how much you own and how much leverage or margin you have, to suddenly not talking about it because we all lost. So when I think about the retail investor having suffered a huge haircut in the stock market, a couple of things are going to be true. First, they're going to feel less rich. Now, obviously, they are going to be less rich, but they're going to even act less because they fear it continues. So a couple of things. First, if you're on margin and you take that kind of sudden hit, you are going to have margin calls. It won't only be hedge funds that have margin calls. There will be individuals that get washed out. There will be other individuals that see this trend coming, and maybe day 10, day 12, day 14, whatever it is, they go to cash, right? They take their losses and they go out. There'll be some that hold on, right? Maybe they're buying with cash, so they're not on margin, and they have diamond hands and they'll wait for it to return. But in my opinion, that won't be most retail investors. So again, if you're on leverage, you're going to get hurt. And even if you don't have leverage, you're going to pull your money out. So then what does that mean for real estate? Well, the first answer is all the high priced areas that rely on the stock market get hurt, right? Think the Bay Area, right? A lot of the Bay Area is kind of liquid now. Their stocks have gone public in the last year. They have RSUs and options and IPO money and all of that stuff. Well, that money gets washed away, right? They suddenly are like, oh my God, I had, 500 grand and now I have 200 grand. And they're like, not going to do anything, right? We're not going to make that investment. So I think high end areas get hurt. But then I think back to what happened last time, right? What happened last time in 2000, 2001, whatever that was. Stock market tanks, really gets going. What happens? The Fed comes out and kind of tries to prop up the market. But at that point, individual investors are hurt. They remember that the wound is still there. So they're not going to come back into the stock market. At least that's what happened last time, right? The individual investor did not come back to the stock market right away. Where did they go instead? Well, they went to real estate, right? Remember, we had the dot-com bubble. A few years later, we had real estate. But real estate really started moving higher in 03, 04, 05. It didn't get wonky until the bad lending later. But that's what I'm thinking about, right? Because again, we have the cash, maybe we don't have as much as we used to before the 30% crash, but where do we go with real estate investing? Because again, stock market tanks, we get hurt, we get that memory, we don't go back. The Fed comes in and does whatever they do, rates go lower. Do we start another real estate boom? I don't know. This is a serious question that I'm thinking about. The other thing I'm thinking about is what happens if the stock market tanks now, like this year, and then we have all of that inventory come on in the summer? What does that mean? I don't know. We have a lot of competing forces. And right now we also have rising rates, which makes the affordability index tougher. So maybe we squeeze out owner occupants and maybe more Wall Street comes in and owns single family homes. That is a concern for me. If Wall Street or hedge funds or deep pockets really take control of the single family home rental market, I don't see that as a good thing. I don't think that's good for our economy. So in the end, I'm nervous about the stock market. Maybe I'm wrong all the time, so who knows? Maybe it goes 30% higher from here. But I have to ask myself, what happens if, it could be anything. It could be the great rotation takes out stocks. It could be a series of hedge funds go out. It could be overspending on infrastructure and taxes. It could be the bond vigilante suddenly taking the 10-year to 3%. It could be lots of things. What happens if the stock market suddenly tanks? Because again, the retail investor, consumer, they've been excited, right? If you're in the market, you're winning. But I remember last time when winning turns into losing, what happens? I think high-end real estate gets smacked. I think transactions slow down. I think rental properties, at least short-term, probably fall until interest rates. And then all that cash, there's already gobs of cash on the sidelines, but maybe even more cash goes on the sidelines. So let me know what you think. What happens to real estate if the stock market falls 30% this year? I don't know. We have something we can go back and look at. It may not be a perfect analogy, but the stocks tanked in 2000. And if you play the hand out, you can see what ultimately happened 4 or 5 years later. Real estate was a good place to be until the banks got stupid and stopped doing real loans. All right. Sorry, that might be a little depressing video, but that was something I was thinking about today. What happens if the stock market falls 30%? What happens to real estate? What happens to consumers? What happens to the retail investor? Let me know. Leave comments below. Bye-bye.